Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, July 16, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? The melt-up continues. The S&P was up another 36 points, SPY up over $3. Little more than 0.5%. The melt-up continues on at new highs. The trend is your friend. Above all the moving averages, the trend is your friend. The market will hit a place. She will correct a little bit. The question is, where is that place and when will it arrive? I don't have that answer, so we just go with we're in a melt-up until she does what? Put in a sign and or signal of a trend change. That gives traders something to trade against. How do you identify what those signs and signals of trend changes are? There's a list of them in the course, Lazy E-mini Trader. You have doji candles, pseudo doji candles, exhaustion candles, reversal candles. Volume is used as a pretty good indicator. So all those things are part and parcel to signs and or signals of trend change reversal situations. We don't have that today. What we do have is a grinding melt-up operation on declining volume, low participation, low volume, summer doldrums. The market will correct. You have to wait. This week is regular way options expiration week. We do have earnings season kicking off. It began late last week. It'll start to get going in earnest over the next few days. Volatility will come back in both directions. We will have up days. We will have down days. The more people that believe we will never have any more down days or down drafts in the market means we're closer to that corrective move than you think. Of course, interest rates are at the forefront of the discussion from day to day. Fed comes out, or at least one of the Fed governors comes out, hints that we're going to see lower rates by the end of the year. They've been doing this, and the pundits and the economists all across the board have been doing this for months. The market's been going up on the hope that lower rates are coming, and each and every time, even after the market's already up, like today, somebody comes out and hints that lower rates are coming, and they want to assign that to the reason why the market's up today. It's a little bit in the redonkulous camp. They need a reason, find an excuse, pick one out, put it to the pundits, disseminate the information. That becomes the reason by 2 o'clock in the afternoon. Some traders want to ask me, hey, is this a blow-off top? And it does not yet have blow-off qualities. It's just a creeping melt-up operation in an uptrend. As long as the moving averages creep up, then price continues to creep up, and then they can't really get too far away from home base if the moving averages keep creeping up. They do get a little bit, they pull back for a day or two, and then all of a sudden it recocks the gun. So this is not of the blow-off nature just yet. Just real quick before we get into details later, this is the IWM. This has blow-off qualities. Doesn't have to be over yet, but when you look at this in the IWM over the last few days, this has blow-off qualities. Now, from an intraday perspective, just because the market's melting up, it doesn't mean there are or are not any trades. There generally are trades to be had in the morning. In a slow tape and a melt-up operation, it certainly limits what traders can and cannot do. What I urge you to do, we'll highlight a few things, but pause the video, read the notes, go back to the chart, and double check the work. Couple of important numbers on the board early going at 0 dark 30. There's more that pop up later. 562.10 was one, 563.70 is another. 562.10, by the way, 5-minute chart right of the vertical is today's activity. 562.10 was in fact low of day to the penny. Interesting, on the board at 0 dark 30, long before the market's even open for business. Let's see what else happened as the day begins to get underway. 8:50 a.m. What's the scoop this morning? we've got 562.70 as an important place and the gateway to another push higher. 562.70. 562.70 is the green horizontal line. That became our pivot, as you'll see in a moment. Above, she's bullish. Below, she's not. Not too far below was 562.10, low of day. The rest is history. They just continued the melt-up operation. There is an important number coming up tomorrow. Inside the number members, live room members, will have that number. If the spiders push a little bit higher, there's a really, really, really important place not too far away. For now, it's a target. Pause the video, read the notes, go back to the chart and double check the work. It's all in here. 562.70. First target was 563.70 if above, and then if above that, they float up near the former highs, which you'll read here. And when you look at an hourly chart, we're talking about the former highs from here. That's what they did. They spiked it. They made a new high. That's what happened this afternoon. Above 563.70, the door would open for those former highs. You can see it right here, 9:48. Closing candles above opens the door for another leg higher. Above 563.70 is the bull case. Just more of the same. Pause the video, read the notes, go back to the chart, and double check the work. This is low volatility, low participation, melt-up operation. What follows all that stuff is higher participation, higher volume. Not a melt-up situation, but some kind of a normal garden variety corrective move. Doesn't ever feel like it will happen again, but it will happen again. Opportunity will show up. It will coincide during earnings season. You can take that to the bank. How about a live room trade in Tesla today in real time, 246.50. Had some nice riders of Tesla up from basically low of day. Had some traders ride up AMD from 175. We were talking this morning about how 175 was a really, really, really critical area. If they were to give up 175, we had some stuff down below. 175 was that place where they're teetering. It's that place where they bring you to the brink. We had some traders get long around 175, had a nice little trade in AMD. This is all live room, real-time stuff where we walk through it and talk through it in real time. What's going on over in Camp IWM? Now, here's something I want to point out. I find it very interesting. We talked about the fact that this really qualifies as a melt-up / blow-off situation. Doesn't mean the blow-off is over, but it is in the midst of a blow-off type situation, exhaustion type situation. Call it whatever you want. Look at the volume down here. Look at this volume box over the last 4 trading days. Look at that volume as compared to the last time volume was ever this high. Wasn't that many times it's been that high. So you go back in time and you say, all right, well, what's going on? So we're going to take that information, we'll heed that information, and we say, all right, there's heavy volume, there's institutional participation. They were breaking out, so we know about that triangle. There was a breakout above the top end of the triangle, the upper trend line, and they obviously broke out in a very, very, very big way, uber big way. Go over to the monthly chart just to put this in perspective. And you see over here, we'll put a box over here and we'll say, all right, this whole area over here is really where the market was eating time off the clock, edging up, edging up, edging up, trying to, spiked up, couldn't do it, and failed. So we'll call this, somewhere in here, is where the market broke down. Okay, fair enough. That's pretty logical. Well, that being said, we have this monthly chart, breakdown candle high. The high is what? 227.13. Now, the market's not exactly at 227.13, nor does she have to even get to 227.13 before pulling back, correcting all that stuff. She can, she doesn't have to. Sometimes they come up short, other times they spike them through. But where we are in time is an on-time type of situation, running a test of a big-time monthly chart, breakdown candle high, exactly at the place where the IWM broke down in 2021. They have come back to retest a breakdown area from 2021. First part of 2022. This is that monthly candle. It's January of 2022. So she's come back to do what? You got it. Retest or run a test of the most recent breakdown area on this chart. Funny how that works. Now, what are the odds that she runs through here, makes a new high without finding some bona fide resistance? Remember, we're in an on-time type of situation. This is a monthly chart. It's a big time frame. It doesn't mean the market has to turn tomorrow. Doesn't mean the market has to turn next week. Doesn't mean the market has to turn in the first week of August. Just want everybody to have an understanding, 30,000-foot view, big picture perspective, what's actually happening here with the small caps, the IWM, the money rotation that I'm sure the pundits on TV are talking about. This is exactly what's happening. They're rotating into the small caps, or have rotated into the small caps, jamming them up. They're on a jam session, on a melt-up operation, on time type of situation. How do you like dem apples? Another melt-up, blow-off, exhaustion situation. Not only the small caps, but also the folks down at the transportation department. Breaking out above the top end of the triangular pattern, the trend line, call it whatever you want. Next order of business is going to be all the way up near these highs over here. That will be your next area of bona fide resistance. It's magnetic, and it will also be resistance. And we know that for a simple reason. Why? Because the market ran up to this place and over a 2-week span of time couldn't go any higher and fell back down quite a bit. So we know that that place Mrs. Market thinks is important. Coming back to run a test of that place, first time, best time, will be important. What's going on with the Q people? Not participating. Money rotating out of some tech into the small caps. We see that now. Money flow is everything. Was money flowing in or is money flowing out? The Qs are still putting in one of these bearish wedge situations, not making new highs, but yet after a move down, a bearish, flaggish, wedgish situation. Again, above all the moving averages, trend is your friend. We'll give them that. But this is not participating, and unless we see a quick turnaround and they start going up again, this is probably some kind of canary-ish tell going on. Don't forget, you have regular way options expiration week. Weird stuff happens. Don't be surprised to see a day or two down after a couple of days up this week. That is garden variety of shenanigan behavior during regular way or any way options expiration week, at least from where I sit. How about the financials? Where's that next place? 43.55, came up a couple of pennies short today. No accidents or coincidences. Also, good volume on the move up. This is institutional participation, but also could wind up in exhaustion type of volume and movement in price. Could be. Don't know it will be. Could be. We're watching. You look at the weekly chart. Financials are at new highs. The trend is your friend. We will look and wait for a sign and or signal of a trend change. Until that point in time, we will respect these markets that are making new highs, that are powering forward, that are melting up. What we don't want to do is guess at where the top is going to be. You might be right once or twice, but overall, over the long term, it's a fool's game. Smashmouth, SMH, Philadelphia Semiconductor Index, no participation today, flat on the day, similar to the Qs, money not flowing in there, money flowing into the small caps, into the S&P, into the large caps. Here's the DIA, for example, the Dow Jones, money flowing into the Dow Jones. Dow up almost 2% today, 1.8%. That's no joke. It's pretty much a melt-up operation across the board with minor exception today. GLD, just take a look at the exchange-traded product for gold. New highs. You don't have to see gold. You know they're at new highs. But we'll see it anyway. Here's GC, new highs. Something doesn't jive long-term. Gold is at new highs, stock market's at new highs. Those things, in my mind, don't necessarily mesh all the time. Therefore, I'm suspect, I'm dubious of that information. I think eventually there's going to be a more prevalent reason why gold is going up. It's not only for inflation. And most of you know how I feel. Eventually, the market will not continue to participate in this manner, meaning the stock market. But for now, it is what it is, and we respect new highs. You don't want to fight the tape. You need something to trade against. You need Mrs. Market to tell you she's stalling out. Exhaustion. Put in a top. Give you something to trade against. Doesn't mean it's right 100% of the time. However, guessing at new highs is, again, a fool's game. It's a recipe for losses. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.